Assalamu alaikum everyone. This is Sir Fahad Ali again with a video. I am uploading a video after a long time on accounting. So we have a new topic. The topic is depreciation. Depreciation is a very important topic if we consider the CAI examinations of accounting. So it's very important, and sometimes we get a question of 20 marks. So 20 marks, you can assume 20 marks out of 100 means 20% of the weightage of paper 2. And we have some MCQs too in the paper 1, so please do cover this topic very carefully. And the topic is very much confusing regarding its methods. So the methods are confusing so much that you will see this in the video next video, that it is sometimes confusing, and the video will be played now.
I'm videotaping. All right. It's fine, take it.
Okay, coming back to the topic. What's depreciation? Depreciation is most non-current assets, fixed assets, lose value with time, which is called depreciation. Depreciation is the loss in the value of an asset, that is the value of an asset fall. I will give a practical example. The example is, if you purchase a mobile phone, the cell phone from a market, then you will see this thing in reality, that you have purchased a mobile of 15,000 in 2010, and after 2011 or 12, when you will sell that mobile, you will not, it is highly likely that you will not receive that same amount. It's a practical example. And considering another example, if I am purchasing a laptop today of 50,000 in 2019, and if I would be selling that same laptop in 2021, do you think that I will be getting the same amount which I spent in 2019? No, obviously not. The reason is that there is a decrease in the value of that asset. Accounting says that you should record the decrease in the value of the asset slowly and gradually, rather than claiming the loss in the year when it is being sold, so that the investors, the people who will be reading our financial statement, should get a true and fair view of the financial statement. The financial statement should reflect the true value, the true and fair value of the net profit which we have achieved in that year, in that particular year. So that's why depreciation topic is here. The examples of depreciation, example of non-current asset with depreciates are building, machinery, motor vehicle, furnitures and fittings, fixtures and fittings, office equipments, and etc. Note 1. Land does not depreciate, instead it appreciates. It is an appreciating non-current asset. Land, you will have observed this thing, that land always appreciates in its value until and unless it is agricultural. For example, there was an agricultural land at some place, and we saw that the land has lost its fertility. So it will obviously, then we will say that the value of land has depreciated, the value has decreased. So the next point is, goodwill does not depreciate. The term used is amortization. It has same concept as depreciation, but the technical term is different. You don't have to cover the goodwill concept because it's not in your syllabus in this topic. So definition of depreciation, I told you earlier, depreciation is the fall in the value of non-current asset. What is the purpose of charging depreciation? Depreciation is charged to spread the cost of a non-current asset over its estimated useful life. Estimated useful life is given by the companies. It will be given by the examiner in your question. You don't have to estimate that. It is also charged to comply with the accruals and matching concept, which states that all costs should be matched with the revenue earned. For example, I will be using some machinery in my production house, so I am getting the benefit as sales revenue, that income which I am generating from using that machinery. So obviously I should charge some cost of that machinery. So that's why depreciation is a topic which says that the logic of matching concept says that we should charge the cost of the revenue earned. For example, I am dealing in pencils. So if I would be selling those pencils in the market, so I would be incurring some cost. So the logical concept says that you should charge the cost and you should record the revenue both at the same time. So that is the matching concept, which sometimes comes in the MCQs. The causes of depreciation: the wear and tear, physical deterioration, passage of time, depletion, obsolescence, change in technology outdated. The first reason is that the rust, rot, which decay, which comes in our machineries, that our machineries start to have some rust over them. So that's the reason why the value decreases. The passage of time, sometimes we have, for example, 10 years of lease, 10 years of copyright patents, which is used by Apple company for their products. They usually take 50 years of copyright patents. So after 50 years of time, the patent value will decrease, the patent value will fall to zero. So that is why the reason is that passage of time. Depletion will always cover the natural resources which will exhaust after some time, that is the oil. If you have any oil, tube well, and anything such as that, which will deplete nearly, which will deplete in short time sooner. So that's why this is a third cause of depreciation. The last is obsolescence, change in technology. This cause, we can also use the term economic factor. That the example I gave in the start of the video, that was of the mobile phone. The laptop and mobile phones will only be depreciated. The reason is that economic factors. There will be a change in technology, and the technology will outdate them. Such as, if I give a practical example, then my cell phone has Android 7.0. Now the market has Android 9.0, and obviously in the future time period we will see another Android, the future updated Android. So that's why the mobile phones keep losing their values. So that's why we charge depreciation. There are three methods of depreciation, namely, there are so many methods of depreciation, but in our syllabus, in our CAI accounting syllabus 7707, we have only three methods which we will be covering in this video. Straight line method. When using the straight line method, the non-current asset depreciates evenly, that is by the same amount over its life. To find the depreciation, we use this method, cost minus residual value. Residual value is also called salvage value, scrap value. These all terms are interchangeably used for this term, and divided by estimated useful life. For example, suppose I have cost, I don't have scrap value or residual value in the question, I don't have any salvage value too. So it means if I don't have any scrap value, it means the scrap value is zero. The cost is here, I divide it by the estimated useful life. And we have another method of straight line method, another method by which we can calculate a straight line method. The next method is, I would be writing down here, the next method is bracket cost minus scrap value, which if it is provided in the question. If it's not provided, then ignore it, assume it's zero, multiply by the percentage which is given in the question. Sometimes the question will give you cost. The question might give you scrap value. If it has given, we will use the scrap value. If the question has not given scrap value, then we will not use it. Then we have a percentage, and the question insists on the straight line method. So, and it becomes sometimes confusing for the candidates to calculate the depreciation. So this is also a method, this is also a formula according to which we can calculate the straight line depreciation method. The key rule is that in the straight line depreciation method, we will always get the same amount in each year, in every year. Like we have an example of a machine. The cost of machine is 80,000, the scrap value is 8,000, and we have estimated useful life of 10. So we got depreciation of 7,200 in first year. So we will assume in each year we will be getting the same amount of depreciation. So this means this is the end of this method. Now we are coming to the second method. The second method is saying reducing diminishing balance method. Its name suggests that it will the depreciation will decrease each year. The reducing diminishing balance method means when using this method of depreciation, the percentage depreciation should be charged on the book value. Book value is that the value we get after deducting the depreciation. The cost minus the depreciation, we will get the net book value. That is cost minus accumulated depreciation of the asset. Accumulated depreciation means the depreciation which has been charged on that asset till now. Sometimes the question gives a balance of depreciation, so we deduct it from the cost, so we get a net book value. Sometimes we do calculate that depreciation because we have purchased that asset in 2011 and we have calculated the depreciation of 2011. So it means that the asset has been used for almost 1 year, so we have 1 year depreciation. If, for example, we have purchased an asset in 2010. The question is saying use reducing balance method. So a rule of thumb is that the cost and the net book value is always same in the year of purchase, in the first year, in the year of purchase of that asset. If I have purchased an asset in 2010, so it means the depreciation, the net book value will be the same as the cost, because there will be no depreciation in the year of purchase at the start. For example, I purchase an asset on 1st January, so there will be no depreciation on 1st January. Obviously I will charge the depreciation on 31st December, because I would have used that asset for the whole year. Now the revaluation method. Revaluation method is used on loose tools which have low value, where exact information is not required as per the materiality concept. The materiality concept says that the tools don't have material value, they are small in value, they keep fluctuating each year, and the evaluation method is applied on some tools which are bulky. So the formula to calculate the depreciation is as follows. Opening inventory, for example, the balance BD of the loose tools is 2000, and we have some purchases of the loose tools of 500, 2500. According to you, the value should be 2500 at the end, but you see that there is a value provided in the question, that is balance CD, and the balance CD is 2000. You calculated 2500 and you saw that the balance CD is 2000, so the difference is obviously the depreciation. It is very simple method of all. If we would compare the three methods, then revaluation method is the simplest method. The journal entries are sometimes asked in the question. The first is we record the disposal, we record the expense of that year. So we debit the income statement. Whenever income statement is debited, it means that expenses are increasing. Provision for depreciation is always credited. I will give a logic why provision is credited. Provisions are credited. The reason is that provisions are not an actual loss. This is a non-cash expense. The company spreads the cost of the asset, as we learned in the definition. So the reason is that the company has created its own expense. It is not an actual expense, so that's why the provisions are created on the credit side, and they are considered as an expense by the company by accounting. So that's the reason why provisions are on the credit side. If someone asks you, then you can clarify them. The first is for recording a disposal. Sometimes we sell an asset. So first is the recording an asset. The first step will be transferring the cost of the asset. I purchase the machinery at the cost of 10,000. Then what I will do is I will transfer the 10,000 to the disposal account, because disposal account is created on the day of sale, on the date of sale, and on the date of sale I create the profit or loss which I have incurred in selling that asset. So disposal account will be debited and machine account will be credited, because we are selling that asset and machine is an asset. Asset decreases on the credit side. The second point, transferring the depreciation of asset. When depreciation increases, it increases on the credit side of the T account. So when it is decreasing, that's why, because we are selling that asset, we need to take the depreciation of that asset from the out of our books, because we don't require that depreciation in future time period, because I have sold that asset, so I don't own that loss, the depreciation, the loss, the decrease in the value of that asset. So I will decrease the provision for depreciation. That's why it is being debited. I will credit the disposal account. Now third entry which I will pass is record the proceeds of the assets. Something will be coming in comparison to selling that asset. For example, in considering to selling that asset, cash or bank, I will be receiving this amount either from cash or bank, or it can be a liability. This person might pay me later. So whatever the thing, it can be cash / bank / the customer from which I will be receiving that amount. So it can be either one, cash or bank, or the person from which I will be receiving that amount in the future time period. And we will credit the disposal account. If there is a loss, then income statement will be debited. That is, the difference will come in the disposal account on the credit side. If there is a profit, then the difference will come on the debit side of the disposal account, and we will credit the income statement. So we have a past paper question, and the past paper question is June 2016. The variant is 12, and we are on question 2. The question 2 is of depreciation. Starting with the first question, state the meaning of the accounting term depreciation. You can write down either definition. The first is it is a loss in the value of an asset, and the second definition is it is the spreading the cost of the asset over the estimated useful life of that asset in the accounting period. That will give you 2 marks. You can write down any definition, any of these. Okay, now coming to the second question, it is a true and false question. So first has been done by the examiner. The first is false. Okay, the second is depreciation is a cash set aside for non-current asset replacement. No, it is not the cash which is set aside for the, so the second is false. Third is true. The reason is that when we will be preparing our financial statements not according to the going concern concept, then we will be recording the assets at the NRV or the lower of or NRV or the cost, whichever is lower. But you don't need to learn this concept if you are learning this depreciation topic. Ignore this concept. So coming down to part C, let's see part C. 1 says profit or loss on the sale of the motor vehicle on 31st May 2015. So we will make the T accounts. The T accounts are not the requirement in the question, but still we will make it. So we will go to the disposal account. First of all, we will see the asset has been sold on 31st May 2015. Okay, we will write down 31st May, and at the top we will write down 2015, and the asset is motor vehicle, so we will write down motor vehicle, and then we will transfer it. Sorry, the spelling is incorrect, so we will write down motor vehicle. Okay, so what we will do here is that we will transfer the cost, that is 16,000. 16,000 will be written down here, and then we will transfer the transfer the provision for depreciation, that is the depreciation which has been charged on this account, on this asset, from the start of when it was bought till the end when it is being sold. So the depreciation is the accumulated depreciation that has been charged on the asset for the lifetime, that is 7,000. So we will write down provision for depreciation, and the amount is 7,000. Okay, 7,000 amount. Now the last thing which is remaining is the proceeds. We can write down either cash, either bank, or liability, but the question is not clear enough to give me a hint that we received cash or bank, so we can write any of these terms. The examiner will give 1 mark until and unless the amount is correct. So the asset was sold for 8,400, so we will write down 8,400. Now we will see the difference. On the debit side it is 16,000, and on the credit side it is 15,400. So obviously 600 needs to be there on the credit side so that we can balance the T account. Remember one thing, income statement is the difference which is required to balance the T account. So if it is coming on the credit side, so it is a loss, and if it is coming on the credit side, it is a gain. Okay, so here 16,000 and 16,000. Why I am writing down this? The reason is that I am closing this T account. Okay, coming down to the to the C part 2, motor vehicles depreciation charge for the year ended 29 February 2016. 29 February 2016. So we will make the provision for depreciation T account. So here we have to go from the scratch. 2015. Make sure that the dates are correct and they are at the correct place, because presentation marks are always there. So we will write down the balance brought down, that is 1st March. So balance brought down is on the credit side, so we will write down 1st March 2015 balance BD. The balance BD is given in the question, that is 18,400. So 18,400. Then sorry, I have written down in the wrong column. Okay, now we have on the debit side the disposal. The disposal was on 31st May. Disposal, and the depreciation, accumulated depreciation, was 7,000. Now we have to calculate the depreciation charge. So depreciation charge for the 29th Feb 2016. So we will write down 29th Feb. Okay, now we will calculate the depreciation charge. So here is the calculation. We have the machinery, that is 20,000 machinery. We have a machinery of 20,000 which has been bought in between the year, that is the in the middle of the year. As you all can see here, that this is the machinery which was purchased of 20,000, that is 30th June 2015. So the depreciation policy, full year's depreciation is charged in the year of sale, but no depreciation is in the year of sale, full year in the year of purchase. Okay, if it's saying full year in the year of purchase, so we will not consider the number of months it is being used, we will apply the percentage for the whole year. So if it is a new asset, then I have told this rule to my students, that in the first year the assets net book value and the cost both are same, and reducing balance method is applied to the net book value. So we will write down 25,000 into 25%, so that will give me an answer of 6250. Okay, this is the depreciation on the new asset, depreciation on new MV is motor vehicle. Okay, so now depreciation on the previous motor vehicles, on old motor vehicles, we will write down this term. So the cost was, old motor vehicles cost at the end was, we had 50,000 of motor vehicles at the start, and now we said that we have sold a motor vehicle of 16,000, so we are left with 34,000. So the cost is 34,000, as we will write down this here, and less depreciation. So depreciation of this is 18,400 minus 7,000. Why? Because we are deducting the depreciation, because we have sold that asset, so we will not include the depreciation of that asset, and that is included in the 18,400 amount. So we will exclude this 18,400 minus this depreciation 7,000. Why? Because the asset has been sold. So we will get an amount of 11,400. Okay, now I will find out the net book value, this minus the depreciation, accumulated depreciation. This is the net book value of the asset. Now I will calculate the depreciation on motor vehicle. Okay, depreciation on motor vehicle will be 22,600 into 25%, so this will give me an answer of 5650. Then I need to add up both of these, this plus the depreciation on the new motor vehicle. Sorry, we have made a mistake over here. I have multiplied this amount with 25,000, so I need to correct this. 20,000 into 25%. Then I will calculate the total depreciation for this year, that is the expense which will be incurred in this year. Total depreciation will be for this year will be 5650, this, and the depreciation on the new motor vehicle, it will give me around 11,000. The answer is 10,650. That is similar to, more or less near to the 11,000 figure, that is 400 less than 11,000. So I will write down 10,650. I hope this was the figure, 10,650. yes, okay, this was the figure, 10,650. Now we will write down the total of these both. We will add down these, and now we will get the balance CD. Balance CD will be 29 Feb balance CD in order to close the T account. Okay, 29,050 minus 27,000, it means 22,050. I am not writing the balance BD, okay, but you need to write down the balance BD. The reason is that we have 2 marks for this balance BD, so be careful in writing down this balance BD. I am not making the T account of the T account of the motor vehicle. Reason is that we don't have any requirement, and as far as the provision for depreciation T account is required, I have given you the total T account in the Microsoft Excel, so that you all can relate. The next part is not relevant to us because that's not related to depreciation. Hope you enjoyed the video. If you have any questions, any comments, any queries, you can ask me then and there in the comment section, and you can email me on my email, which will be displayed at the end. Do like my Facebook page, do subscribe to this channel. If you haven't subscribed, press the bell icon and support me, and subscribe to my other channel too, which you will get the link at the end. Stay blessed, stay inspired, and I love you all.